Homes are being locked down. More and more existing American homes are affected today. It's a giant problem and a big reason why housing supply is constricted today. Demand exceeds supply and it keeps home prices going up, up, up. This looks to get worse, and I'll show you just what I mean. Hi, I'm Keith Weinhold, Get Rich Education founder, Forbes Real Estate Council member, best-selling author, and longtime real estate investor. Before I inform you about what you probably haven't thought about before, first, almost everyone has heard of the interest rate lockdown effect or lock-in effect. Borrowers that got mortgage rates, say, below 4% a few years ago, well, they're reluctant to sell their home today and replace it with a property at today's 7% or so interest rate. So they stay put, homes don't move, and as a result, the market has less available inventory. But see, other lockdown effects, they have silently crept in here. They're constricting the market's supply too. A second one is what I call the purchase price paid lock-in effect. It is independent of interest rates. You are living in an unusual era. Rapidly rising home values since 2020 now today mean that many homeowners live inside a home that they could not even afford if they tried to repurchase their own home at today's price and interest rate. Wild. What this means is that if they sold their home in order to take a profit, well, they would still need to go live somewhere else, so they would often have to pay more in rent for a comparable home. They're locked into a low mortgage payment, and that's not just an interest rate thing. That's due to both the low rate and the low price paid just a few short years ago, and they're reluctant to give up that situation. So this also means that they're motivated to make sure they don't miss a payment and become delinquent because they'd often have to pay more to rent elsewhere. See, when, say, call it a $750K home like this, say if that gets locked down, then people that want to move up from their $400K starter home, they can't move up. So their starter home also doesn't get put on the market. And see, these lockdown effects have ripples. There's a third lockdown phenomenon right now, and nobody talks about it either. Rapidly rising home values are creating what I call a capital gains tax lockdown effect. If you're single, you generally don't pay any capital gains tax on the first $250K of profit on the sale of your primary residence. And for married couples, your ceiling is double that. It's $500K of tax shielding if you're married. Those exemption thresholds, they haven't adjusted for inflation in a long time. Well, today, more sellers risk taking an exorbitant capital gains tax hit. The share exposed to paying it was just 1.3% 2 decades ago, and now it is 7.9%. That's per CoreLogic. And see, this growing threat, it keeps people from putting their homes on the market, and the tax hit can be up to 20% of your profit. All right, well, we all want capital gains. That's just a fancy term for your profit from buying lower and selling higher, but no one wants capital gains tax. A lot of times it's older Americans that control these properties that have so much profit potentially that they would need to pay tax on. More of them are not selling because too much of that money will go to taxation and not enough to their heirs. So instead, they're over here aging in place. And see, a lot of homeowners, they hang on to their houses until they die because then the cost basis of the home resets for whoever inherits the property. All right, for example, if a home that was purchased for $400K many years ago sells for, say, $1.4 million today, that's a $1 million gain. Well, since a single person gets a tax exemption on the first $250K of that million, then they'd have to pay tax on $750K. If a married couple has that same $1 million capital gain, they'd be protected on the first $500K of profit and then only have to pay tax on the other $500K, the unsheltered $500K. And capital gains taxes can be triggered, as high as 20% for the seller, but instead, if the homeowner keeps it until they die, the heirs may be able to sell it tax-free. So the ones that get hit the hardest here are the single homeowners and homeowners in high-priced markets. And by the way, note that I'm oversimplifying the example here to make it easy to understand. Consult with your tax pro for details. With more homeowners choosing to age in place rather than pay taxes on their gains, housing inventory is staying low, and that keeps the market competitive for buyers. And really the bottom line here is that three distinct lockdown effects contribute to the housing shortage: mortgage rate lockdowns, purchase price lockdowns, and capital gains tax lockdowns. They all conspired to keep housing demand higher than supply, and therefore this is just continuing to help push home prices ever higher. And look, this chronic housing supply shortage, this plays into the worst housing crash you've ever experienced, which I predicted. Watch this, where I recently talked about it. Some people just completely missed it. And a lot of people like to speculate about the future, but what most people miss is what's actually already happened and how you can respond now. Watch this about the 100% certain housing crash right here.